Hi everyone! Happy 2025. A new year, a new tax filing season. Let's dive in to what you need to know for filing taxes in 2025 for your 2024 US tax return. I'm Nathalie Goldstein, CEO of MyExpatTaxes. If you don't know who I am already, let me introduce myself. I'm Nathalie, known as Nat from San Jose, California, now living in Vienna, Austria. And just like you, I've pretty much fumbled my first few years as an expat with my US tax filing. I mean, first, it just learning that I had to file US taxes after moving to Austria was like, why? Long story short, I was like you. I created MyExpatTaxes, the tax filing software for Americans living abroad filing their US taxes. And that's why I'm here. I'm here to help you with everything I learned in making your US tax filing experience a lot easier, a lot smoother, and no longer this terrible, terrible thing you have to do, but maybe even make it enjoyable. So let's see if I achieve that. What are we going to talk about today? Well, of course, we have to start with what's changed. Every single year, with every single new president, things change. And so what are the changes that you should be aware of for this year and how that impacts your US tax return? After that, of course, we'll also get into some basics, what you need to know if you haven't been filing, and generally how to plan for a good financial year ahead of you. So first and foremost, what are the important tax filing deadlines? Well, the first deadline, which we all must know as an American, and if you still watch American TV shows, you'll hear it anyways, is April 15th. April 15th is the deadline to file US taxes if you live in America. And regardless of where you live, America or not in America, it's also the deadline to pay your US taxes. So you'll hear the next deadline, and that is the deadline for filing US taxes as an American living abroad. But remember, the payment deadline is still April 15th. So yeah, little chicken and egg situation. Basically, my general guidance is if you believe you will owe US taxes, make sure to file and pay your US taxes by April 15th. If you don't think you'll owe any US taxes, chill until June 15th, basically, is the general consensus there. And of course, by June 15th, you can always secure a filing extension to October 15th in case you need more time. And if it's really necessary, you can always send in a letter for an additional extension till December 15th. This is again only available for those living abroad. And there's always more ands, but this is the last and. And if you haven't been filing your taxes, of course, just try to catch up as soon as possible. That's really important because if you do owe taxes, the penalty on those taxes and interest, it accrues daily, right? So the longer you wait, the higher the fees. Now, let's get back to this whole chicken and egg situation because you're probably going, how do I know if I owe taxes if I don't need to file my taxes until June 15th? So what we say is if you moved abroad in the middle of the year, right, in the middle of the 2024 year, so if you have some US sourced income and you also have foreign income, please try to file by April 15th. So that's really important because a lot of times if you did work in the US, your federal withholding won't be enough to cover the fact that you also then worked abroad, right? Because of course your US company doesn't know then your salary when you moved abroad. Now, if you also have a lot of just US source income in general, so even if you're living abroad the whole year, but you have a lot of investment income, you have rental income, basically you have income that you don't pay foreign taxes on, and you have a good amount of it, so over about 12, 13K, you'll probably end up owing some US taxes. So please try to file and pay by April 15th. And of course, if you generally file and you know every single year you owe taxes, this year's probably not going to be any different unless something really changed in your income profile. So again, try to adhere to the April 15th filing deadline. Now, even if you're not completely ready to file by April 15th, what you can do is you can go into MyExpatTaxes, just put in your information, whatever information you have, estimate the information you don't know exactly yet. You can see before you even have to pay, what is your estimated amount of taxes owed, or if you're estimated to have a refund. And then that will help guide you. So I just encourage you to go through this. Start it. You don't have to finish it by April 15th, but start the process so you know where you stand. Because it's never nice to know, hey, you owe taxes, but also because you waited an additional 2, 3, 4, 5 months, now you owe even more, right? Why give the IRS that money? You should keep it in your pockets. So now that you know the filing deadlines, who actually has to follow these filing deadlines? Well, I know there's a lot of talk about residence-based taxation and all of that jazz. Just keep in mind, none of those laws have actually been passed yet. And so for your 2024 US tax return, it remains the same. If you're a US citizen, if you have a US green card, if you had substantial presence in the US over the last 3 years, you have to file a US tax return. I won't even touch on if you are a non-US related person and you have US source income, for that's a 1040 NR return. I'll just talk about 1040. Essentially, if any of that covers your situation and your worldwide income meets the filing thresholds you see on the screen, you need to file a US tax return. So filing thresholds are usually in line with your standard deduction. This just means that this is how much you can deduct from your income, right? Your adjusted gross income before we calculate any tax on your US tax return. And luckily, the standard deduction will normally increase every single year due to inflation. I just want to call out 2 really important things that you do see on the slide is if you're married filing separately, your filing threshold, it remains the same. It doesn't change with inflation. It's the same since 2018, and that threshold is $5. And that means if your gross worldwide income is over $5, and that includes bank interest, any type of income, salary, pension benefits, retirement income, etc. If it's over $5, you have to file a US tax return. Another thing to mention is if you are self-employed, even if it's just a side job, you're just doing a little bit of freelancing, if you have any type of self-employment income that you would normally report on Schedule C of your Form 1040, if it's over $400 net profit, you have to file a US tax return even if you don't meet the filing threshold. And I will call out something else. For those that are students, you may not meet the filing threshold, but if you have to file a tax return for your student loan repayments, that might also be a reason to file. There are a lot of different reasons to file. This slide just tells you who needs to legally file if you meet the filing threshold. And again, it means if your worldwide income, your worldwide gross income is over the filing threshold, you legally must file a US tax return. Just remember, worldwide, so income from all sources, US and abroad, gross income, meaning income before expenses, deductions, and taxes, combine it all together. If it's over the filing threshold in USD, please file a US tax return. So that was essentially the bad news. Well, what's the good news? The good news is there are increases that help you. So I already mentioned your standard deduction does increase quite a bit. It's up to $750 plus per tax filing status. And keep in mind, even though the married filing separately filing threshold is $5, you do have the same standard deduction as single filers. Another thing that's important is tax brackets are increasing, so there's more money that's taxed at the same rate, basically meaning you can earn more but still end up paying lower amounts of taxes, if you even end up owing US taxes, right? Another important thing for those that use the foreign earned income exclusion, which is a very popular expat tax benefit, is it's jumped now from $120,000 to $126,500 US dollars. So that's especially good news for those that live in low income tax countries, because that means you can exclude more of your income from US taxation. And probably the best news is for those that have US children under the age of 17 with a valid social security number, you might be eligible for a refund. Yes, a refund that's up to $1,700 per qualifying child. So if you do have children under the age of 17 with a valid US Social Security number, and you generally live in a country with higher income taxes than the US, and you're not using the foreign earned income exclusion, you should expect potentially a pretty good refund. And yes, you are eligible for this refund no matter where you live and where you work. While there's a lot of cons about having to file a US tax return from abroad, there are some pros. So if we are still all stuck in that US tax filing system, at least we're also eligible for those refunds. A couple other things to note that are not directly related to everyone's tax cases for the most part is just if you are contributing to your individual retirement account, those contribution thresholds have increased. You can contribute up to 7,000 US dollars or 8,000 US dollars if you're age 50 or over. Again, this is for your 2024 US IRA, which you can still contribute to up to April 15th, 2025. So keep that in mind. Now, another thing is if you do have IRAs and you're on the older side, then you do have to keep in mind that you have to be taking out required minimum distributions. If you're age 73 or over, there are really more specific rules, but generally if you're 73 or over, think about taking out required minimum distributions. The good news is if you somehow miss them, the tax has decreased from 50% of the distribution to 10 to 25% of the distribution. So the IRS did lower that tax because they did realize a lot of people don't exactly know that they have to distribute at a certain point, and so at least the penalties are not so high. Well, they're not as high as they were. They're still pretty high. Another thing that's important is, of course, if you have not been filing US taxes, especially tax return 2021, please do so by June 15th this year. Otherwise, you're giving up $1,400, potentially even more if you're filing jointly or you have dependents on your tax return that you can claim. And if you haven't filed your 2021 US tax return yet, please do so by June 15th, because if you don't, you could be potentially giving up 1,400 US dollars. More if you're filing jointly or you have dependents to claim on your US tax return. This was the final stimulus payment that was given out, and it expires. So again, if you haven't filed your 2021 US tax return, remember to do so this year, earlier than later. As you've all probably also heard in the news, the IRS Direct Free File continues to expand. However, unfortunately, it's still not available for international taxpayers. We are watching closely, so the minute it does become available, we will let everyone know. But until then, unfortunately, as always, us expats are left out. At least we have our community together, right? Couple other things. There's always so many things. There was a lot of actual changes that kind of happened under the scenes this year. And so I'm trying to give you the most important relevant ones for you. So just bear with me. If you are selling anything online, right? If you sell anything, if you make money online at this point, especially with US, sites, Amazon, Airbnb, etc. If you make over 5,000 US dollars in a sale or combined transactions, you will get a 1099K. I just let you know this because we saw this happen a lot last year, that these sites are starting to issue out these US tax forms, 1099K, and people don't know what to do with them. And some folks end up throwing it away or they never receive it. And then the IRS gives you a notice because it says, hey, Amazon reported that you made 20,000 US dollars, but you didn't report this. We're gonna give you, accuracy related penalties, under-reporting penalties, and tax penalties on top. Please don't let that be you. If you sell anything online in 2024 for over 5,000 US dollars, or you made over $5,000 from these sites, look to see if you get a Form 1099K issued to you. You will see that on the site itself. You'll see that on Amazon, you'll see that on Airbnb, you'll see that from whatever site that you're using. And make sure to report it accordingly because the IRS has that information and they will expect you to report it. I warn you for this because next year, the filing threshold for that drops even lower. It's gonna be $600. So basically, if you do anything online business-wise, the IRS will expect you to report it. Now, on to better news is as our current president at the time of speaking, right? So as Joe Biden exits the office, he did sign into law the elimination of the Social Security windfall elimination provision. So an elimination of an elimination. What that means for you is that if you are living abroad and you're collecting Social Security benefits, your Social Security benefits will not be reduced anymore just because you were working abroad and you also have income from foreign employers. So this is great news for expats because it was always the whole issue of we live abroad, we're forced to file US taxes from abroad, we're still forced to pay US taxes, and yet you reduce our Social Security benefits when time comes. So now that will no longer be the case. And it's kind of like a sandwich, but in reverse order, where it was bad news, good news, and now bad news again. So I apologize for that. But the last note is just to keep in mind, and maybe this will turn into good news next year, but for now, there is still a legal dispute over net investment income tax. So if you're a high earner, say 125K for married filing separately, and you have investment income, interest, dividends, capital gains, etc., you are on the hook for 3.8% net investment income tax. So this is also a reason you might want to file by April 15th, just FYI. This also impacts us expats. And there's a huge legal debate on that right now because now we have a second court decision in Canada saying that net investment income tax is not legal and you should be allowed to use foreign tax credits against it. The IRS continues to appeal, and so even though there's a lot of information on the internet saying that you can use foreign tax credits against net investment income tax, as of now, no, you cannot. Not until the IRS agrees with the decision and then implements it. So unfortunately for tax year 2024, net investment income tax still holds true for us expats. A lot of information, I know. If you've been filing regularly, you probably, could keep up a little bit with what I said. And if you haven't, I hope I didn't instill a new level of fear in you. There is no reason. So if you haven't been filing, don't worry. You can always catch up. And like I said, it's so important to catch up earlier this year because if you file your 2021 US tax return before June 15th, June 15th is the deadline, but please try before, right? Because you have to mail these returns. If you do that through the streamlining procedure, you could get $1,400 as a refund. And of course, if you were due refunds from, qualifying children from the additional child tax credit, you'll also get those refunds. And the really nice thing is, even if you've been sitting there really concerned about filing your US taxes and thinking, oh, this is gonna be terrible, I'm gonna get penalties, it's gonna cost me so much money, please rest assured is we really try to have the most affordable streamlining package out there. We try to help you be able to streamline as fast as possible, right? So this is just not a lingering procedure. And on top of that, if you're due refunds, and most people are due refunds in tax year 2021, the IRS will pay you interest. So as you owe the IRS interest if you pay late, the IRS will pay you interest if they pay you late, even if they're paying you late because it's your fault. So that's nice of the IRS. And the IRS interest rates are quite high. So if you are doing streamlining, and it happens so often, you could be coming in terrified of the procedure and you could be coming out with thousands of dollars in refunds. So just bite the bullet, jump into MyExpatTaxes.com and just start. I promise you, it's gonna be a lot easier than you holding it off and worrying about it. So once you've decided to go and file your US tax return, just some things to be aware of as you file your tax return, as you read your tax return, whether you do your taxes with us or another company or firm, is what are the expat tax benefits that you should be seeing on your US tax return? So there are generally two main expat tax benefits, and that's the foreign earned income exclusion or the foreign tax credit. The foreign earned income exclusion is on Form 2555. So what the foreign earned income exclusion does, which is calculated on Form 2555, is it can exclude up to, for tax year 2024, $126,500 of foreign earned income. Foreign earned income is as it sounds. It must be foreign, meaning that you need to have worked abroad for this income, and the income must be earned. So this must be salary or business or active partnership income. So you cannot use the foreign earned income exclusion for passive income, such as investment, rental, or retirement benefits, etc. Now, it's a really great expat tax benefit because it's pretty easy to use. It's just one form, Form 2555, and especially if you're living in a low income tax country, so say Singapore, it's amazing because it can really just eliminate your US tax liability, even if you're not paying what the US would charge on your salary over there in Singapore or whatever country you're in. This is also great for those that are working for international organizations such as the UN or the WHO, where there is no income tax. There are obviously some cons to using this. So the lesser known side effects is that it might eliminate your ability to contribute to a US IRA if that's something you're looking to do. If you were eligible for the additional child tax credit, this will completely disqualify you. So just those things to keep in mind. And of course, if you use the foreign earned income exclusion, you should generally stick to it. So it's also not that light of a decision to just kind of decide, I'm going to use this, because once you use it, you should stick to it, because if you stop using it, then you basically cannot use it for 5 years. Now, the other expat tax benefit to be aware of is the foreign tax credit approach. And this is calculated on Form 1116. This means that whatever taxes you pay in your local country, you can use it as a credit on your US tax return. So if you pay $30,000 equivalent of income tax in Germany, and then you file your tax return, and the US generally has a lower income tax rate than Germany, you owe $20,000 US, then you can use all of the income tax that you had paid in Germany on your US tax return to get to 0 US taxes owed. So this form is a lot more flexible because one, you can use it on all types of income. You can use it on salary, you can use it on passive, you can use it on retirement income. One thing to note there is it is more complex to use because even though you can use it on all different types of income, there are different versions of this form, Form 1116. And so you have to make sure that you use the right version of the form and you use the right foreign tax credits for the right bucket of income. What does help though, because you can use it on all different types of income, it also gives you taxable income. So if you want to contribute to your US IRA, and it also allows you to claim the additional child tax credit. So this form is generally flexible, but it's complex to calculate. It can be. And that's why MyExpatTaxes does try to make this process easier, because you don't have to sit there thinking, which tax benefit should I use? No matter what plan you use from us, whether you're in our base plan, whether you're in our reviewed plan or a premium plan, every single taxpayer will get their tax return with an optimization schedule that says, this is how your tax return looks like using the foreign earned income exclusion. This is what it would look like using the foreign tax credit approach. And because it looks better under approach A or B, we're going to use that approach to make sure we optimize your taxes. So while every tax software and tax firm says that they're looking to optimize your taxes, we actually really look which way can we best optimize your taxes to get you the best refund or lower your taxes as much as possible. Here is again an overview of what I just talked about. You know, this is a nice kind of bulletin point thing to look at. I will just call out that there is one more column, which is the tax treaty column. And again, this is for the situations where you have some type of income that you can't exclude under the foreign earned income exclusion. So say retirement income, social security benefits, government funded retirement income, and you don't pay local taxes on it, right? So you get some type of social security benefit from your local country, but you pay no income tax on it because it's directly from the government. Only I think the US charges you income tax on government benefits. Anyways, what do you do? What do you do with that income? Do you just pay US tax on it? No, you don't, right? There's possibly a tax treaty benefit that can be applicable for you, meaning that you can potentially exclude that income 100% from your US tax return. You still have to report it. You still have to report, the tax benefit you claimed on Form 8833, because if you claim a tax benefit without disclosing that you claimed it, you have a penalty of up to $1,000 for each instance. But I'm just saying that if you can't use the foreign earned income exclusion and you can't use the foreign tax credit, maybe there's still a tax treaty benefit that is out there for you. And again, this is something that we calculate for you automatically. So if you go into MyExpatTaxes, you enter your income, we will automatically identify what income is eligible for which benefit, and if you use the foreign income exclusion, how much can we exclude there? If you're using the foreign tax credit, what are the different buckets of income you have and how do we allocate the income taxes properly to each bucket? And if you have some type of income that is eligible for a tax treaty benefit, making sure that we disclose the tax treaty benefit and we exclude your income, because there's just no reason to pay US tax on it if there's no need to. That was all about your US tax return. A lot of information. I hope you found it informational and also that it gave you more control over how to file your US tax return, how to understand your US tax return, and how to understand that system. So with that being said, a couple things that are related to your US tax return that should not be forgotten is, of course, FATCA and your FBAR. So FATCA, as we all know, is the Foreign Account Tax Compliance Act, and it is a US federal law saying that essentially if you are having financial accounts outside the US, that financial institution has to report those financial accounts to the US, and you yourself as a taxpayer, you also have to report it to the IRS or the US Treasury accordingly. So the first level of that goes with the FBAR. And the FBAR is a separate report about your foreign financial assets and accounts. So it can be foreign pension accounts, it can be bank accounts, it can be investment accounts, it can be life insurance policies with a cash value, all that is not US based. You have to report this on the FBAR report, which basically means here is the account number, here's the address of that account or financial institution, and here's the maximum balance I had in the year for that account. So this would go to the US Treasury. And this has to be filed if the combined maximum balance of all your foreign financial accounts is over 10,000 US dollars at any point in the year. This calculation is a little bit odd, right? But it really means that the maximum you had in any foreign financial account, take that, even if you're transferring money between different accounts. So even if you had 5,000 pounds in bank account 1 and then you transferred that 5,000 to bank account 2, guess what? You have to total those. So it's maximum balance 5,000 for bank account 1, maximum balance 5,000 for bank account 2, even though it's the same 5,000 pounds. Now, once you get all the maximum balances or estimated maximum balances, right, you can use monthly statements for this. You would then convert that to USD, and if the total is over 10,000 US dollars, you have to file an FBAR. If you're unsure if you have to file an FBAR or not, please file an FBAR. It's just not worth the penalties because the penalties are very high for FBARs. Keeping in mind on the FBAR, there is actually a checkbox that says you don't know the maximum balance. So if all else fails and you don't know the maximum balances and you don't know if you went over the threshold, file the FBAR, check the box, just make sure you get it filed, right? Now, there is one more level to that if you have over 200K on the last day of the year or 300K combined over the entire year as a single filer, these amounts are doubled if you are married filing jointly. If you are living in the US still or at any point in the year in 2024, just keep in mind these amounts are dramatically reduced. You need to file the FATCA form, which is Form 8938. It's a little bit more of a blown up version of the FBAR. Essentially the same information, just a few additional questions like if the account was opened or closed in the year, etc. And then this goes with your US tax return to the IRS. Unfortunately, on this form, you can't check a box that says, I don't know the maximum balance, so you should try to figure the maximum balances out accordingly for this form. Both forms, like I said, have very high penalties attached to them. As we come to the end of this webinar, I want to close out saying that it's important for you to make a plan for your own financial success. As you have to juggle these US tax reporting requirements, remember the flip side of that coin is that you now also have access to the US markets. So a couple things to just keep in mind. I know we went over the filing deadlines, but again, important dates is January 27th is when e-filing opens, which means you can file your US tax returns already, and then refunds are normally processed within 2 weeks of that. If you think you have to pay US taxes, right, for any of the number of reasons that I mentioned, you have a lot of US source income, you are working part of the year in the US, etc., make sure to pay by April 15th. At least make an extension payment, right? So you don't end up paying additional fees for no reason. And then if you are contributing to your US individual retirement account, remember you can contribute up to $7,000 for your US individual retirement accounts. You also have to do that by April 15th. There are a lot of rules around if you can contribute to a US IRA, so please plan accordingly. We do have planning services with MyExpatTaxes that you could use to determine if you're eligible to contribute to a US IRA. If you need support on how to open up a US IRA or do any other type of investments, then you can always go to My Expat Invest and then there get linked up with financial partners that can help you be successful both with US and local financial markets. And of course, going towards that, June 15th is when you should be filing your US tax return or securing an extension till October. If you didn't get your 2021 stimulus payment, June 15th is also that deadline. By October 15th, you should have filed your US tax return or, if needed, secured the final filing extension. And again, for those that have new additions to your family, or maybe you never got around to getting Social Security numbers for your children yet that were born abroad, please do so before October 15th because then you can still potentially claim them on your 2024 tax return to get any refunds. So I hope what you take away from this webinar is that it's really important, but of course, plan accordingly. Think about what you want to achieve this year outside of just, filing your US tax return and getting that over with. But if there's other things you want to achieve or other things you want to do, such as investing, opening up a company, buying property, etc., that we do have the tools for you. So you can always use My Expat Planning. And we're looking to release a really amazing version this year of our planning dashboard where you can click through whatever your situation might be, moving abroad, moving back to the US, buying property, selling property, getting an inheritance, contributing to certain US retirement accounts, contributing to foreign retirement accounts, and basically getting a walkthrough check-by-check step list of how to avoid any US tax pitfalls and how to make sure that you're successful in your decisions. And then if you're looking to work with a financial advisor that can help you where you are locally in the world, then look at My Expat Invest so you can get partnered up with one. So with that being said, I wish you all the best in your tax filing experience for this year. We're always here for you at MyExpatTaxes, whether you want to use our base plan, do it yourself, whether you just need a tax professional to take a second look in our reviewed plan, or if you really want to work with one of our tax professionals, could also be me, right? More closely in our premium plans. We are here for you to make sure that you're successful as an American living abroad, juggling all of these US reporting responsibilities. With that being said, we'll jump now into the live Q&A session. So get your questions ready. And of course, if somehow your questions are not answered through our Q&A session, you can always join our Facebook group, which is a very chatty group, and there you can always post all of our questions. You'll see that on the screen. It's a nice community, right? So you can always ask your questions there. Or if you prefer, you can just email us your questions as you see the email on the screen. And there, maybe you have a more private question you want to ask us, and we are always here to help you. So ask your questions, get the help you need. We are here for you.